If you're juggling 5 indicators and still losing trades, you're doing too much. There's only one Forex indicator you truly need to simplify your trading strategy and start winning consistently. Now, most traders lose not because they're lazy, but because they're overwhelmed. They overcomplicate their charts, second guess their decisions, and forget that trading is about simplicity, not chaos. Here's the deal. If you keep adding tools and strategies to your charts, you'll stay stuck in analysis paralysis. If you focus on mastering just one proven indicator, you can turn your trading around faster than you think. Now, I've been trading for over a decade, coaching thousands of traders, and time again, the one who succeeded are those who master the basics and trust the power of simplicity. Now, let me tell you about Rachel. She used to have 10 different indicators on her screen: Bollinger, RSI, moving averages, and a bunch of others. And her trades were all over the place because she didn't trust her setups. Then I told her about MACD, Moving Average Convergence Divergence, an indicator that tracks trend, momentum, and reversals in one simple tool. She removed everything else and focused on just the MACD signals, and within a few months, Rachel went from losing 70% of her trades to winning over 60%. She wasn't trading more, she was just trading smarter. Now, if you want to learn more about trading strategies and how you can use the MACD, then just click the link below in the description and you'll be able to get access to some of the most effective trading strategies out there based on what's going on right now in the markets. So what is the MACD? The MACD measures the relationship between two moving averages, the 12 period and 26 period, and it gives you a clear signal for trend direction, momentum, and potential reversals, all in one glance. So how do we set it up? Now, you don't need any fancy tweaks. Use the default settings, 12, 26, and 9. And these have stood the test of time for a reason. When the MACD crosses above the signal line, these are buy signals. When the MACD crosses below the signal line, these are sell signals. The histogram shows momentum. Bigger the bars, the stronger the trend. Smaller the bars, the weaker the trend. Now use this to confirm your trades or stay out of weak markets. Now, you could also use divergence for reversal. And if price action is making higher highs, the MACD is making lower highs, that's a bearish divergence. Your heads up for a potential reversal. And the same goes for bullish divergence in the opposite scenario. Low, high, higher low, high, lower high there. The MACD works best in trending markets. So stick to a 4-hour or a daily time frame for the most reliable signals, and then combine it with the support and resistance levels to pinpoint the best entries. Some people say, can I use the MACD in a sideways market? The answer is no. It's not designed for that. So stick to trending markets and you'll get the best results. Now, trading doesn't have to be overwhelming. Simplifying your strategy with just one indicator not only makes trading easier, but also more effective. And the MACD is proof that less really is more when it comes to winning in Forex. So, if you're ready to simplify your trading and start seeing real results, give the MACD a try. And if this video helped you, hit like, subscribe for more trading tips, and I'll see you in the next one.